So here's where we are. All of these costs are getting put into factory overhead. These could be thousands and thousands of dollars worth of costs. You're not going to apply them all to one particular guitar. What you're going to do is you're going to apply them on some sort of allocation basis, which we'll talk about what some of those bases are in a few minutes. But you're going to be accumulating all of those potential factory overhead costs. And what you're going to do is you're going to, as I said, you're going to figure out some method of allocation to that particular guitar. And what you're going to do is you're going to credit factory overhead for that particular amount, and you're going to debit your work in process. There we go. Okay. Now here's the thing. Because we're using a job order cost system, each job is going to have its own WIP. So this could be the WIP for guitar number 101, and there would be another WIP for guitar number 202, and another WIP for guitar number 304. All right, so each individual item, because this is a job order cost system, each individual item is going to have its very own unique WIP. And the idea being is because if you made a guitar that cost you $100 to make, you would want to keep track of, you would want to price that guitar based on the fact that it made you $100, that it cost $100 for you to make it, rather than a guitar that maybe cost $1,000 to make. Then you would want to charge that guitar appropriately. And the only way you're going to capture those costs is if you keep them separate and individually. All right, so what we're doing here is we're tracking one particular guitar. But if we were tracking two guitars, we'd have WIP number 2, or three guitars, we'd have WIP number 3. And like I said, the reason being is if I had somebody working on this guitar, if they were working on guitar number 1 here, and they spent 5 hours on it, well, then I'd want to put 5 hours worth of their time, how that translates into dollars, into this particular guitar number 1. But maybe guitar number 2 they spent 40 hours working on. Well, I'd want the correct amount of wages payable to go to that particular guitar. So this is really the crux of job order costing, is that you are tracking each individual job and exactly how much it costs to make something. All right, so let me go over here and continue to finish up my journal entries. I've got to debit WIP, and oops, I should have given a space there, and credit to my factory overhead for some amount. Okay, so that's where I stand right now. Our next step is maybe we finish the guitar. Now that, oops, that's not the right side. Now that we've finished the guitar, what we want to do is we want to take it out of WIP because it's no longer an item that's in process. We want to take it out of WIP, those costs, and we want to put them into our finished goods inventory because we've got those 3 classes of inventory with these systems: raw materials, work in process, and finished goods. So what we're going to do is, now that it's done, we're going to credit the WIP by whatever the cost is of all of these items. We'll say to finished goods. All right. These would obviously be dollar amounts here. And we're going to have a finished goods category of inventory. All right. I know my lines aren't straight. Right. So what this is looking like here is you're taking it out of WIP. So here's your credit to WIP. If you've got a credit to WIP, your debit is going to be finished goods for whatever the cost is. All right. So you're going to debit finished goods, credit WIP. Let me type that into this document. So to transfer the finished product to finished goods, you are going to debit finished goods. Oops, not bold. Finished goods. I'm off screen here. I'm going to debit finished goods and credit your WIP. All right. Almost done. We're at the second to last step in this process. So now these items are sitting in finished goods, basically waiting to be sold. So when you do sell those items, They're going to come out of finished goods. Here we go. So we're going to credit finished goods for the items that are done and we're selling. And we're going to credit our cost of goods, oh, I'm sorry, debit our cost of goods sold. Okay, so here we go. We're going to be debiting our cost of goods sold and crediting our finished goods because we've sold the guitar that we just made. So that's our final step in this process once we actually sell it. So I'll give you the last journal entry in written format. All right, and that's what the final journal entry looks like, a debit to cost of goods sold and a credit to finished goods. Now you remember the way it works is the cost of is just a reminder of how the income statement works. What you've got is you've got your net sales minus cost of goods sold gives you gross profit. Okay. I actually did leave out one thing. When you sell a finished product, you guys should remember this. When you sell something, it has a two-part journal entry. The first part is a debit to cash or accounts receivable of some amount, and the credit is to sales revenue. And the difference between sales revenue and the cost of goods sold is basically your profit on that sale. So let's just say, just to give it some numbers, let's say the guitar ultimately cost me $500 to make. Then I would have $500 here and $500 here. And maybe I sold it for $800. Then this would be $800, $800. And it would be, like I said, just as a little bit of a reminder, oops, how this all works. It would be sales revenue of, using my numbers, $800 minus cost of goods sold of $500 gives me, this is just my very quick and dirty version of the beginning of the income statement here, gross profit of $300. Okay, that's what that journal entry right above basically does for you. It records the sales revenue, it records the cost of goods sold, so you can put them into the income statement here, and it records the receivable and takes the item out of your finished goods inventory because once you sold it, it's gone, right? It's out of your inventory forever. All right, so the last thing we're going to talk about for a second here is going to be um, period costs. Those are all product costs. All these WIP costs are product costs, costs of actually making the product. Whereas period costs are something different. They're actually the costs not related to making the product in any way, shape, or form. So an example of a period cost would be any sort of selling expenses or administrative expenses. So if you had sales salaries, the salary of the people actually selling the guitars to the public, maybe working in your stores, then they would just go straight to the income statement as period expenses. All right, so you would have, say, for example, a debit to sales salary expense, maybe a debit to administrative salaries expense if you've got administrators that have absolutely nothing to do with making the product whatsoever, and the credit would be to wages payable. So the idea is, well, here, I'll give you the journal entry. It looks something like this for period costs. Oh, I'm on to the next page. It would be something like this. You would debit sales salary expense or debit administrative salaries expenses, and you'd be crediting wages payable. The idea being that these items would go directly to your income statement. All right, they go directly to your income statement in the sense of that they're expenses. Whereas when you had something like a wage expense before for people that were actually working on the product, it doesn't go straight to your income statement. Instead, it gets accumulated into the cost of the product that you're making. All right, so that's what's going on here when you've got people that are your direct labor on the project that you're making, rather here. All right, so there's a very big distinction there between product costs and period costs. All right, this is a little bit cut off because I can't expand the size of my window any further, but this is a pretty neat slide to show you exactly what we were just doing here. So you've got all product costs, right? You've got your materials purchases, they go into your materials inventory, and your materials go into work in process. Your direct labor goes into work in process, your factory overhead goes into work in process, and once they're done, your product is done, they all go into your finished goods inventory. All right, and the next step is looking at period cost, which, as you can see, again, a little bit cut off, selling administrative expenses. So all of these product costs go to the income statement as the cost of goods sold, and the period costs go across your income statement as selling and administrative costs. Okay, so a nice little visual. Unfortunately, it's a little bit cut off for you guys. You can see it in the slides, though, that are online.